To the Closing Beat, a live show where we cover the stock market, financial tips to get your dough straight, and sometimes Disney World. Wait, seriously? Disney World? All right then. The Closing Beat, presented by Jazz Wealth.
Yeah. Not bad. How are we doing today, everybody? Welcome to the Closing Beat. Happy Monday. Hope you're having a good day. It hasn't been easy to say that lately. Hope you're having a good day. We, a little bit going on here today. We have a ghost in the keyboard, so if I type something a little funny today, well, then that's why. Just don't know what's causing that, but we're going to roll on anyways here. We are financial advisors that are better at numbers than we are with cameras and editing equipment. And 2023 is going to be the year that we ask you for your business, right? If you enjoy what we're doing here, I just want you to consciously think about maybe we would be a good fit for you. And if that is the case, then you know where to find us, jazzwealth.com. I'll tell you what, in the meantime, no strings attached. Listen, we don't joke around here with emails, but if you go to jazzwealth.com/2023, just 2023, we have all the numbers that you'll need to know for next year. A lot of changes there. And it's just two simple pages, a little PDF that we'll send you, and we won't sell your email. We won't beat you to death with emails and stuff like that. But if you want to check it out, that was the only way we could put it up there and legally be able to give you that information without getting in trouble. So you're welcome to use it. If you're a client, you already have it. It's in your portal. But hey, you're welcome to check it out, and we do take that seriously. That as you may know from the old Guess the Dow days, you didn't get put on some email list or something. I don't like that. Might send you notes from Jazz every once in a while if you're interested, but other than that, we won't bother you there. Anyways, speaking of a bother, stock market, huh? Now, I kind of want to pull back, so I'm a little bit happy about this. But if we look at the S&P here, just pop on over, see if this works. Hey, not bad. If we look at the S&P, another down day. And at one point, we were closing down over 1%. Do you know that this is, right now, it doesn't matter whether today was down 1% or not. We're on track for the third worst year, I don't know how to say it, the third place year for the number of 1% days or greater. So plus or minus 1% days, meaning we had one particular day where the market was up over 1%, one particular day where it was down over 1%. Did you know that we have to take one off the list because today didn't close down 1%, but 118 days this year have seen a greater than 1% move? Do you know what the average daily move in the S&P is? It's not anywhere near 1%, I can tell you that. It's like positive 0.19%. So volatility is the drinking word for the year. If you're curious, by the way, 2008 holds the record, so not too long ago, 134 days. Naturally, we can't beat that record this year. 2002 with 126, and it's not going to beat that either. So we look like we're going to close in third place here. Look at all these days in here, and if you want, just like look at a chart of the S&P and just zoom out. Look at last year and the year before, outside of some COVID little hiccups here and there. Look at all these days that are just monstrous there. So you survived. You're going to survive, and just know that, I mean, I know I said that a lot this year, the records that we've been hitting, bond market, record down year and all this stuff, but that is an interesting record there to let you know about volatility. If you made it and it didn't bother you, well, then you know you can handle volatility. If you've been really worried throughout the year, just know that that's like pedal to the metal. That's like almost as extreme as it can get there. And, now you know. Maybe you want to back down just a little bit there. All right, let's go back on over to the markets here. So here's the S&P, still very much in the middle of this downtrend doing its thing. We were down 2.1% last week. We can now comfortably say, probably without any doubt, that the peak of the year came on day number 1. You know that? I'll go over here and see. January 3rd, that was officially the high in the stock market. That means that there's been nothing but down all year. There was not a moment in time where we went above the very first day of the year. It's been down since then. So that's why the joke there. Let's just get 2022 out of the way. Let's all go have a Merry Christmas, celebrate our holidays, and then get back to work because that's nasty, man. You live through it there. So the big question is next year, recession? No recession. Recession? What's it going to be? I think a lot of people are leaning towards recession. If you look at a lot of the consumer sentiment numbers, the general market participant sentiment numbers, y'all are thinking recession there, right? So we'll see. Last week's retail sales did not help very much at all, if I could sound negative for a moment. News out of China last week, every single one of their data points came in below expectations. Well, that certainly didn't help there. The Fed didn't help either, but going back to retail sales for a moment there, the fact that that's weak, how do you read into that? I didn't cover this. I should have expanded on this, but we went over the retail sales numbers. The fact that retail sales numbers were weak, but people still have jobs, what does that tell you? Can you get anything from that? Can you glean anything from that? There's my big word of the week. The fact that retail sales are rapidly slowing, but we're not seeing people unemployed. Think about what that means. It means that you have a job, but you're not willing to spend as much. So it means your budget's getting tighter and tighter and tighter. Probably a no-brainer right there. Well, that can only withstand so much before people start getting into crunch time and we see delinquencies start to rise more than they are, meaning now you're having troubles paying your bills. So that's like if I could put a little magnifying glass on one area of the market with just a handful of economic indicators, I'd be looking right there. Don't get confused by all the other stuff out there. That's probably where I would keep an eye on. And I bet you, well, we know that that's where the Fed's looking. All right, if we look over the NASDAQ here, down 2.7% last week. That's just 1 week. That 1 week, 2.7%. Maybe doesn't sound like a lot this year, but I guarantee you, if you zoom out and you say, what's the average weekly performance of the NASDAQ? We could even look at it in the research site if my keyboard wasn't being weird. It's not 2.7%, plus or minus. No. So that's the NASDAQ there. The Dow down pretty good on the day, about 0.5%, but you don't mind so much. This is pulling back in the midst of a downtrend. This is perceived to be a viable pullback, and in fact, throughout many points during today, there was at least an attempt, not a very good one, but at least an attempt to buy the Dow as people look for where to put money at to the end of the year there. Russell 2000, good little pullback there as well. It's now reached about the halfway point. I don't know whether it bounces here or not. That is the glass half empty, half full scenario that a lot of people like to look at. If we look at crude oil, coming off the bottom there, do we have a recipe for crude oil to fall apart before the end of the year? Do we have a recipe for it to not be one of the leading asset classes next year? No, all signs point to bullishness and strength for crude oil. Again, it's just a supply issue out there. When you have, as we talked about, you have companies saying, we're not interested in drilling. We're not going to do it. We're just going to give money back to shareholders. That will weigh on supply. Demand can get softer, but supply is drying up. Anyways, so that's what you have going on there. It was a quiet day for our portfolios here as well. Slight drag across the board. I'll tell you, the Chinese education space, that's a space that I've been focused on a little bit, because if there's one thing, I spend a lot of time teaching Chinese individuals. If there's one thing that they believe in, it's education, and to the extreme. They will not let education suffer over there, and they have a lot of publicly traded education companies, believe it or not. So those were our leaders today. Our best performers were in that space, and I am thankful to own them, because they will not let their education industry suffer over there in China. China didn't do too bad there, though. I mean, a lot of good stuff over there anyways. But let's give you some good stuff here. All right. It's not a lot of current event type stuff to cover unless you're into FTX, and I'm not, so I won't cover that. But let's talk about next year, the market performance, knowing that the Fed is, moving the needle. They're really controlling the puppet, so to speak. So you know that when the Fed raises rates, that tends to be a little tough on markets. Not always meaning where market's going to go lower, but for the most part it does. And so what happens when they stop raising rates? Is that helpful? Does it mean that the market goes up? Should we be looking for that? So the Fed has already raised their target or terminal range, so 5 to 5.25 range is where they're expecting there. So we got another rate hike in us at least. But what if they stop raising rates and they just hold it for a while? Is that good for the market, or is it bad for the market? So yes, we're going to be able to do it. We're going to go over here. And I just haven't changed the title to it. So we'll just go like this. Sorry. This is on the screen. This is the performance of the S&P 500 following the final rate hike. So in other words, they hike, we stop. Some period of time goes by, they either hike some more or they start cutting, which is more common. So 1 month after the S&P has lived through the final rate hike, you start seeing a little sign of hope. I'll tell you, in a couple days to the week after they stop raising rates, don't worry about jumping in early. It tends to be a little weak one there. 3 months after, 8.2%, 6 months after, 12%, and 1 year later, 24.2%. The odds of the market moving higher after the final rate hike are very good. What does that tell you? There's no hurry to be in the market until that happens, because there is nothing else moving the markets. Nobody cares about anything else. Bond markets can do all this crazy stuff they're doing every day. Everybody's looking at the Fed. So historically, when the Fed stops raising rates, you wait about a month and you say, okay, people are cool with that. They're adjusting, they're absorbing the higher rates. I would argue that this may happen a little bit faster this time because we have already started absorbing those rapid rate hikes there. So just something I wanted to point out for you, and I'll take it one step further because I can today. Are you buying a house? You thinking 2023 is your year? You're going to get a discount on a house, you're going to buy it, but you worry about those interest rates there. This is sort of outside the market, but it will relate it to the market here. Yeah, you might get a discount, right? Home prices are coming down. I follow that thing like a hawk. So you see the number of properties that have reduced their price, you know, it's coming down. I don't think it's going to crash. There's not going to be any of that. But yeah, maybe you say, okay, in 2023, if my area gets a little cheaper, I'd be willing to move to a different house or whatever it is. The interest rate side of things, you know, the interest rates are higher. That's a no-brainer. But what about the volatility of interest rates? Are they now whipping around like crazy and one day they're up this much, next day they're down a little bit? Or is it calmly moving higher? So I wanted to kind of illustrate that for you because just like inflation, we hope, it may be that interest rate volatility is peaking. So here is, it's known as a move index, if you want to look it up. It's brought to you by Morgan Stanley. They keep this together. And they basically look at the volatility of interest rates. So you're not looking at interest rates, you're looking at the volatility. For example, here in 2020, right around COVID, the volatility of interest rates went crazy, and, well, you know why. So we then started calming down. Everything was good. Then the Fed started raising rates. Now the volatility of interest rates has expanded. Now, you're not looking for the back and forth here to determine volatility. The higher the index goes, the more volatile rates are. They're jumping around day to day, and it's all kinds of crazy. Well, we may have peaked there. We're starting to pull back. So this would be a worthwhile index to look at as we go into next year to see, is the volatility of interest rates falling? And if so, you know that right around wherever they're priced at is probably what you're going to pay. And you can now make a decision as to whether you can live with that or you want to wait it out or whatever. For a while there, it was like, oh my God, one day you look at the rates, the next day you look at them and they've changed by a half point, like, which is a lot in mortgage markets. So just so you have something to look at, an extra place for you to go. What else do we got here? Hey, stocks in the news. Can we try it? I think if I just go like this, it'll still work. Yeah. So Tesla in the news. Elon Musk again. I guess he did a poll. Said, do you think we should I step down as CEO of Twitter? Most people said yes. I don't think he would agree with the results of that poll, but that's what's happening there. And Tesla investors are like, hey man, get back to work. We need you over here. And we talked about that last week. Meta's in the news. This is another lawsuit. They're piling them on overseas there. They're looking for money. So over in the EU, they're looking for money. They got a lot of costs going out of control over there. They are hitting Meta here saying, you may have broke some rules. We may be looking for some money from you. And so that was in the news. Nike reports earnings tomorrow. They do beat about 80% of the time on earnings. And 6 out of the last 8 times that they reported earnings, the stock was higher. They could use a little bounce there, huh? After the last 4 days of a pullback. Also, Disney, we've got to talk about that. Oh, Disney hit a new low, $85, $85.50 there. I didn't see it, but the Avatar movie, I guess, was not a hit. Wait, let's go back. it was not as big a hit as they were hoping. So check this out. They thought in the opening weekend they'd make about 135 million. So Disney said that we got to make 135 million. That's what we hope we'll make in the first week, or first opening weekend. They made 134 million. I mean, who's counting at this point, right? Nonetheless, that sort of sets the tone. Opening weekend sets the tone for how profitable a movie's going to be. And it's not looking like their biggest hit there. Very expensive movie to put together, by the way. So just so you know, you may go see the movie. You know what I mean? Like, check it out. Support them. Otherwise, if you don't like Disney, then don't. You know, no big deal. I do want to give a quick shout out here to Mr. Jonathan of Hogan's Music. So I have this trumpet. I should have done this in the beginning, but I have this trumpet. This is an old trumpet that was given to me by my mother-in-law, and it was all beat up and stuff, and we just used it as a prop back there. And one of our clients actually fixes these things. And I said, well, you got a project here, man. He fixed the entire thing. Everything is basically brand new. I don't know how to play it, but everything works perfectly. It's all nice and shaped up there. And that won't be the last time I'm actually mentioning him, because you notice we have another one back there that could use some help. Now I know my man can do it. Hogan's Music for the shameless plug there, because my man did a good job. Very, very good. Also tonight on the Jazz After Dark, you gonna come hang out with me tonight? We're gonna talk about qualified versus non-qualified dividends. And I'm gonna tease you a little bit, because there's one thing that everybody falls for, and I get this question 100 times a year. And you know when I tease you, there's something good coming, right? So, and I'm not messing around, but how do you get screwed when you think you have qualified dividends? It happens all the time. I'm going to go through exactly how that works. I'll give you an example. I'll even take you to the IRS's webpage and show you exactly how you can research it as well. So we're going to talk about qualified and non-qualified dividends. Come join me in the home office there. The little drink. Huh? See what we can do. Put this day behind us. I'll try to answer your questions here if I can. And I'm going to try not to use the keyboard, because that's giving me a little grief there. See what we can do there. Yeah. Tanger likes the text now. You like tech pulling back. That's because it's discounted. Old Tanger's still sitting there counter trend. Huh? I know it. Yeah. I mean, I think I can play the trumpet. You know what I mean? But I know everyone in the office thinks I can't. As soon as it came in today, I was just playing it like crazy. Yeah. Yeah, we're not going to talk about the shorting side of things, but you are correct there. If you are short the stock, then you are not entitled to the dividend. You would be paying the dividend. That also is true for various options as well. You got Disney January 6, 85 calls. Well, I like that you bought basically in the money. You're taking a shot for a little bounce there. I wouldn't mind that one. A little counter trend, but that's me. Yeah. How much pain before the markets recover? How do you want me to define that? Like, a little pain, like excruciating pain. Yeah. I know a lot of analysts have started to kind of turn the corner on Disney only from a fundamental perspective, just saying, okay, now we're getting to a price. Kind of like Meta back then. When Meta was so cheap, people were like, you got to buy it just because it's cheap. You don't have to agree with them, but it's just cheap. Ah, Marco, ha, 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 ha. Marco making fun of me there. So it does only have the 3 keys, which means I don't have the little hooky finger. Get my little fingers on there. So often I just hold it like this, man. All right, that's my thing. Yeah, yeah. A lot of pain. Max pain, I would say definitely not max pain. I would not be predicting max pain for next year. Remember that when the markets fell to that previous low, people believed that that was the cheapest spot to buy. So in order for us to go lower than that, there has to be a new catalyst that makes people believe that the market should be cheaper than that. Right now, nobody has a belief that would extend to that. Remember, recession and everything was already priced in at that point, and that's the level where everybody said, okay, that's too cheap. The market is too cheap on a forward basis. Time to buy. So we need something new there. What would be the new thing there? Maybe all that money going out from the Inflation Reduction Act? The oddly named bill? Yeah. That's right. We will see. And now there'll be stocks that hit new lows. There's no doubt about that. All right, we'll wrap it up there for the day. I like your presumption there. Maybe a little expansion on Russia's attempts at their war. Could be. But I'll wrap it up there for the day. We'll be back tomorrow to do it all over again. Remember, the market gets increasingly quiet throughout the week, right? So people start doing whatever they do. Our traffic is crazy here in Florida. So people start slowly moving away from placing orders and they go do whatever they're doing for the holidays. So if you notice the stock market shoots off in one direction to start the day and then sits quietly, expect that, right? Then wait for the end of the day. You get your action at the end of the day. What happened today? Right at the end of the day, there's a little action, and otherwise it was just in a quiet little downtrend there. All right. Okay, we'll wrap it up there. Enjoy the rest of your day. See you tonight. Come on, hang out with us, man. We'll see you tonight on Jazz After Dark.